Hello and welcome to Stockwatch, presented by me, Evan Lucas, for Go Market Securities. As always, please have a very good read through of the disclaimer on screen. Everything in this video is general in nature, none of which relied upon as any form of personal advice. Go Market Securities does not know your personal scenario, nor your personal financial goals, and therefore none of which relied upon as any form of advice at all. It is just general in nature only. If you ever want to see why diversification works, just look at Macquarie. Macquarie is an incredible business, and that needs to be pointed out from the start. It is diversified across so many different mixes that it can offset issues that it has in one with the other. And let's have a look at that. Year on year for the half, so this isn't the full year numbers, for the half you saw a 7.5% jump to $2.8 billion. If you look at the overall cash number, it came in at 6.99. Really quite impressive. And basically the thing is though, Macquarie this day is followed so closely, it's bang in line with consensus on both numbers. EPS came out at 727 cents, which was also better than expected at about 720, so 725 is good. Return on equity at 27.5, again, shows why Macquarie is what it is. They are broadly in line. What was interesting and what maybe caught some of the market off by guard, the tax rate is up to 27.5%. Most people had expected it to be at 25. So 2% increase, they still delivered that number. That's quite impressive. But this is where you got to go down into the numbers and have a look at it. Macquarie Asset Management, so AMM as they refer to it, down 43.2%. Not surprising considering where we have seen the markets in the last 6 months, that we know that the inflows have not been great. It meant it came in at $940 million. Expectations had been over $1 billion, so that's a big miss on that space. But banking and financial services, 32% up to $621 million. A little bit below consensus, but it shows that Macquarie is making the right movements in that space. It has been very strong in its retail banking arm since coming into that fore and turning it into a division they now believe is their core pillar. It's moving in the right directions. But the one to look at, the commodities and global markets contribution was incredible. 70.2% jump year on year to $4.01 billion, blew everything out of the water and offset the issue that happened in MAM. That's an incredible number. Again, you'd have to argue that's not necessarily going to be consistent. We know that sort of GPM continuously has up and down numbers, and CGM and that space is always up and down, but that's an incredible figure. Macquarie Capital unfortunately declined 56%, down to $206 million. That was a big miss. Operating expenses came in at 14.4. All of that shows that they're good. The dividend came in at 450 cents, which was a little bit better than expected. Payout ratio sits at 60%. Again, normally for it. What I now need to highlight though is their FY24 guidance. The more and more I deal into it, the more and more the analytical world confirms this too. It's really conservative, like really ultra conservative from Macquarie, and they're probably putting in there the ability to downgrade rather than upgrade. So it's sitting at the very bottom end of all of the expectations they had at the end of FY22 starting this financial year. There's really good scope there to sort of see a better than expected number. It tends to be a very Macquarie thing to do, which is underestimate and over deliver. And this feels very much like that. If you look at their commodities business, it's really low. If you look at their AMA business, it's also quite low ball in terms of their expectations. And a lot of people are picking that up. So although the headline figures were good, although they had these really quite divisional numbers, expect Macquarie to probably have a bit of a decline on the reaction because again, they are priced to perfection for a good reason. They are probably one of the best banks out there. But again, looking at what they're doing, they are doing Macquarie things. And by Macquarie things, what I mean by that is that they have the ability to continue to give you the better than expected numbers into the future.